Hi guys, welcome to this video. In this video, we are going to talk about the difference between forex trading and binary trading. This is a concept that every beginner trader usually wonder, which one can I go for? Do I go for binary trading or do I go for forex trading? And what are the differences? What are the advantages of trading forex? What are the disadvantages of trading forex? What are the pros and cons of binary trading? We are going to talk about everything in this video in details so that before you make a decision which one to go for, you will be very well informed and you will make the right decisions. Let's dive right in. Now, what does the term forex stand for? We are going to begin with the definition of the term forex before we go to forex trading. So the term forex stands for foreign exchange. So when you want to move from one country to another, you have to exchange the currency of the country you are moving from to the currency of the country you are going to in order for you to be able to spend once you get there. For example, say for example you're coming from Kenya to the United States. Once you arrive at the airport, you will have to exchange your Kenyan shillings into US dollars. So you're going to have to sell your Kenyan shillings and buy dollars. Basically, that is a forex transaction. So what is forex trading? Forex trading involves buying and selling of currency pairs with an intention of profiting from the price fluctuations. What do I mean by this? This means you predict that the dollar is going to rise or the dollar is going to fall. Okay? So if you predict correctly, you're going to benefit from those price fluctuations. Once you get to understand this, you can go into the market and benefit from price movements of different currencies. Now, let's explain what is binary trading. Now, before we go into binary trading, let's talk about the term binary. Binary means two, yes and no, up and down. So when we talk about binary trading, it means we are limited to two options. So basically, what is binary trading? Binary trading is a fixed trading system whereby a trader can predict whether an asset will go up or down within a set time. This basically means that in binary trading, you have a time frame. Once you place a trade, after that time is over, that is the time you will know whether you have a profit or not. While in forex trading, you benefit from the price fluctuations. In binary trading, you only benefit if your prediction is correct within a set time frame. Are we together up to this point? Now, let's talk about how do you make money trading forex and how do you make money trading binary. What is the difference between these two? Now, when you're trading forex, profit or loss depends on the size of the price movement and the trade size. That is what we call a lot size. Are we together up to that point? There is no fixed return and losses can exit deposits if not managed properly. What does this mean? Say for example, you have predicted the price movement, the price is going to go up for a certain currency pair. If you have not set your stop loss correctly and the market goes the opposite direction, you might end up losing all your funds if it does not happen as you had predicted. In forex trading, you have a higher potential for making profits and also a higher potential risk. What do I mean by this? We have said that in forex trading, as long as your prediction is correct, as long as your price movement prediction is correct, you're going to make money as long as the market is going in the direction you had predicted. And if your prediction is wrong, you're going to continue losing as long as the market direction is moving in the opposite of what you had predicted. So what can you do in order for you to avoid making two huge losses? You set a stop loss. Okay? so that you can leverage between the losses and the profits. So you set a stop loss before you enter that trade. But when you are trading binary, what does binary trading mean? Binary trading offers a fixed payout or a total loss. This means before you enter a trade, you already know how much you're going to make. And if the market does not go as you predicted, you already know how much is your potential loss. If the prediction is correct, you get a predetermined return. If your prediction is wrong, you lose the entire stake. Let's talk about this deeply. In forex trading, once you have entered the market, let's say like for example you entered at a certain position. As the market moves in the direction you had predicted, your profit increases. If the market goes in the opposite direction, your loss increases as the market is moving. But in binary trading, you only lose the amount of money you had staked, and you make a profit that is predetermined before you enter that trade. Say for example, let's use an example. You have gone into a forex trade with a stake of $100. So your lot size, say like for example, your risk is $100. And the market goes into the direction you had planned. $100 can pay you upwards of, say for example, you can make $200. If the market continues going in the direction you had predicted, you can make $300, $500, $1,000. It has no limit, as long as the market is going in the direction you had predicted. If it goes on the opposite direction, your stake of $100, you can lose $100, $200, $300, and like that. But when it comes to binary trading, your stake of $100, that is your potential loss. Then your profit is going to be determined by the broker. So if you had a stake of $100, the broker can say, I'm going to pay you $90 if your prediction is correct, but the broker is going to take 100% of your stake if you are wrong. So meaning your potential loss is $100 and your potential profit is $90. I hope this is clear enough. But don't worry, we are going to dive deeper into this as we move on. Now, let's talk about the risk and reward in both forex and binary trading. This is one place whereby most beginners don't consider when choosing whether to start with binary or choosing whether to start with forex trading. Now, how does this work? How does it work? Your risk is very simple when it comes to binary, and it is already determined before you take that trade. Now, your risk, we have said the risk is fixed, but you have a lower profit potential over the long run because you have a fixed payout structure. What do we mean by this? What we mean is, say for example, you are entering the market with a stake of $100. Your profit is already determined even before you start trading. So with $100, the broker tells you, I'm going to pay you $90 if you are correct, and you're going to lose $100 if you are wrong. So even before you enter that trade, your risk has already been set and your potential profit has already been set. So up to this point, we have already determined that forex trading, there is no fixed profit or fixed loss. You are the one to determine, this is the amount of profit I want to make in this trade, or this is the maximum amount of money I want to lose in case my prediction is wrong. But in binary trading, the broker determines that for you. Okay? Let's talk about the time frame. For forex trading, you don't have a fixed time frame for your trades. This means your trade can last for minutes, hours, even days. But when it comes to binary trading, your trade has a fixed time frame. This means that before you enter that trade, in your contract, you know that this trade is going to take only 1 minute. This trade is only going to take 1 hour, which means at the end of that 1 hour, you have either made money or you have lost money. But in forex trading, it is possible you had predicted the market to go up, but immediately after going into the market, the direction changes from what you had predicted. If you don't close that trade, you have the potential of waiting for the market to reverse into the direction you had predicted before. Meaning, you don't have to take a loss just because after 1 minute, the market did not go into your direction. This also means that the market can go into the direction you had predicted and later on move into the opposite direction, resulting to you hitting a stop loss. So in binary trading, the time frame is already set. Okay? I hope I am trying my best to make this as clear as possible to ensure that somebody who is trying to decide between binary and forex, which one is better for me, I am trying to make it as simple as possible, as understandable as possible for you. Trading strategy. Let's talk about the difference between the strategy that you're going to use when trading binary and when trading forex. In forex trading, you're going to require very deep understanding of the forex market. So you're going to require technical and fundamental analysis for you to be able to make money in the forex market. You're also going to require something called a good risk management. Okay? This is something that many people struggle with, risk management. Once you have a good risk management strategy, you are guaranteed you're going to make money in the forex market. Now, let's jump over into the binary market. Binary trading is more of a speculative trade, whereby there is no long-term strategy-based investment. So binary trading is not a long-term strategy-based investment. So it is a short-term. So it is, say like for example, a trade is going to take 1 minute, 2 minutes, 30 minutes. So you only study the market for a time frame of say 1 hour in order for you to predict where am I going to place this trade. But in forex trading, you have to look at where the market is coming from in order for you to predict where is the market heading, and that is how you're going to make profits. Okay? I hope we are together up to this point. Kindly, if you have any questions, leave them on the comment section. I will go through every question that you have so that I can be able to help you understand the difference between these two, so that as you make a decision on what you want to start with, you're going to make a very informed decision. The next item on our discussion is regulation. Before you enter the market, you need to know if the broker you are using is regulated in your country or anywhere else in the world. Forex brokers tend to be very strictly regulated all around the globe. When it comes to binary trading brokers, most of them have been unregulated for long. This is why you will find many brokers who will promise payouts, but once you have made a profit, the broker disappears. So when you choose to trade binary, you need to choose your broker wisely. You need to look for a broker who you can trust, a broker who has been there for a long time. The same goes for forex trading. The reason is, if you use a broker who is not regulated in your country, in case you lose your money, you have nobody to claim to, because the broker was not regulated. Meaning the government has no information about the owners or the business that was being run by the brokers. Okay? We have finally come to the end of this video. Thank you very much for sticking to the end of it. In short, what we have just talked about, if you are looking for a long-term opportunity, forex trading is the best opportunity for you. But if you are just beginning and you don't have enough capital, you can go for binary trading and slowly transit into forex trading. Leave a comment in the comment section. Tell me what do you want me to talk about in my next video. Also, like, subscribe and share this video to other people who are interested in becoming forex or binary traders. Thank you for watching my video. See you in the next one.